Best investment to make in 2023. What can appear to be a steady economy can soon be turned upside down, as was demonstrated during the epidemic. At a moment's notice, many people lost their employment and sources of support for their families, leaving them struggling to survive. Several financial gurus would advise you that investing can be one of the only methods to prevent this when inflation rates soar to all-time highs. You should invest for other reasons as well, though. You can generate passive income through investing while your money generates income for you. Making varied investments is essential if you wish to enjoy a happy financial future. It might be a good idea to start buying shares right away if you haven't already. Only those who wish to invest in 2023 should watch this video. Hence, watch the entire educational film. Let's look at the top investing categories for 2023. Number 7. High-interest savings accounts. Investment to make. For innovators who desire a short-term, less risky account, this form of investment is excellent. You can also save your emergency fund or money you need to access easily because it is less dangerous. Risk. The FDIC insures banks that provide high-yield savings accounts. There is no risk of losing your initial money. Although this is regarded as a secure investment, there is a chance that you could lose money if you use the money to buy assets because inflation rates are higher than the account's interest rates. Where to purchase? High-yield savings accounts are provided by banks, credit unions, and online lenders. It's crucial to compare shops to find the greatest prices. Your account balance is paid a modest interest rate on a high-yield savings account. You should keep your cash or emergency savings there. With so many banking options available, you'll discover that internet banks offer greater interest rates. From the high-yield savings account to your main bank, money transfers are simple. Number 6. Certificates of deposit for short term. The best investment for a CD is a wise choice for several factors. If you're a retiree who doesn't need the money right now but wants to earn interest, this is a great account to keep your money in. For investors who don't mind locking up their money in exchange for interest later on, a CD also works well. Risk. For the most part, CDs are regarded as secure investments. If you desire to reinvest and lower interest rates become available after the maturity date, they could be risky. It could also be dangerous if inflation rates increase significantly and affect your ability to buy things. Where to get it? CD accounts are available from banks and credit unions. Another name for a short-term certificate of deposit is a CD. These certificate funds are provided by banks at a greater interest rate than a conventional savings account. Both short-term and long-term CD durations are available. Since inflation rates are typically predicted to increase, short-term investments are typically advised. Whenever the short-term CD matures, you can reinvest your money to stay up with inflation. The banking organization you choose will regularly pay you interest if you open a CD account. You will receive your initial principal balance returned along with the interest earned on the account once it reaches maturity. A CD account has a timestamp, which is something to keep in mind. This implies that you must consent to keep your funds in the account until the account's maturity date. If you determine that you must make a withdrawal before the account reaches maturity, there will be a fee. Number 5. Funds for short-term government bonds. Best investment for new investors searching for cash flow, these investment funds are suitable. Risk. Because the U.S. government backs government debt instruments, they are thought to be the safest investments for money. Compared to short-term bonds, long-term bonds have larger interest rate risks. If inflation rates exceed interest rates, just like with any other investment, you could lose money. Where to acquire it? Online lenders let you invest in mutual funds and exchange-traded funds ETFs. Government bonds funds are mutual funds or exchange-traded funds that the U.S. government invests in debt securities. Even when interest rates climb, government bonds are seen as low-risk investments. Number 4. S&P Index Funds. Investment to make. Beginner investors who want a low-risk taste of stock market investment should choose this security. To see a return, it is advised that you stay in your employment for at least 3 to 5 years. Risk. The S&P 500 is regarded as being less hazardous because it includes components from some of the biggest and richest corporations in the world. You could still lose money due to shifting rates because it is still regarded as a stock and does not have government backing. The S&P 500, on the other hand, has a track record of having positive rates of return on investment. Where to purchase it? Any brokerage account that enables you to trade mutual funds and ETFs can be used to invest in the S&P 500. Comparing the S&P 500 index funds to conventional banking products like high-yield savings accounts and CDs, the latter are riskier stock market investments. These funds are based on 500 of the biggest U.S. corporations, including Berkshire Hathaway and Amazon. Among the 500 corporations, this particular investment kind offers a small amount of diversification. Even on modest contributions, the S&P 500 boasts an annual return yield of roughly 10%. Number 3. Stock Dividend Mutual Funds. Best investment for. If you're searching for a tiny source of income, dividend stocks are a good investment. This form of investing appeals to both short and long-term investors. Risk. There are dangers associated with this kind of investing. Before investing, it is crucial to perform some research on the company's history and reputation. It would be wise to diversify your holdings in dividend stocks. Where to obtain it? Dividend stocks can be purchased through any brokerage account that offers mutual funds and ETFs on the stock market. Quarterly distributions of a company's profits to shareholders are known as dividend stock funds. With dividend stocks, you can profit from your investments both long-term and immediately thanks to dividend payouts. Number 2. Real estate and REITs. This is the ideal financial investment for long-term investors and those with large lump sums of cash to cover down payments and all associated fees. Real estate is the greatest option. Similar to how REITs operate, but without the fees and down payment. Instead of owning the whole piece of real estate, you do so with a REIT. Risk. Investing in real estate carries a certain amount of risk. The housing market and all products associated with the home, including appliances, boilers, and roofing, are impacted by inflation rates. Where to get it? You'll need to engage with a real estate broker to buy real estate. REITs are available on a variety of platforms or through a brokerage account with publicly traded REITs that function similarly to equities. A large investment for many homeowners is their house. Moreover, income properties, flips, and REITs are real estate investment vehicles. Real estate investment trusts are REITs. You don't need to buy a house to make this kind of investment. Instead, you are funding a portfolio of assets that are managed by a third party. Number 1. Cryptocurrency. The best investment for high-risk investors with extra cash may consider cryptocurrency. It is not the best option for those looking for a safer investing path. Risk. Because cryptocurrency isn't regulated and not backed by the US government, it is a very risky investment. Where to purchase it? Certain cryptocurrencies may be bought on exchanges like Gemini and Coinbase, as well as brokerage sites. Digital money known as cryptocurrency can be used as a medium of exchange online. In recent years, there has been a lot of hype surrounding cryptocurrencies as investors pour money into them, increasing their value. Bitcoin is one cryptocurrency that has skyrocketed in popularity. For all subsequent cryptocurrencies, Bitcoin set the standard. While cryptocurrencies have extremely high volatility, they can also bring you a lot of money very quickly. As we've seen this year, the value of Bitcoin and all other cryptocurrency exchanges has significantly declined, leaving many investors with nothing. How did you like the video? Do you like it? Leave your valuable comments in the comment section below. And don't forget to like, share, and subscribe to our channel on YouTube.